Welcome to Alpha Recap. Thanks for joining us after the close. We've got a market wrap that's all about big tech leadership and small cap pain. And as always, if you have questions, you can reach us at stockalpha.ai.
Good to be here. Markets closed on a fairly narrow advance today, and the main story was concentration at the top of the market.
Right. To put numbers on it, the S&P 500 ETF finished up about 0.4%, while the Nasdaq 100 ETF outperformed, rising about 0.9%. Meanwhile, the Russell 2000 ETF finished down about 0.6%.
So, what really stands out here is that the headline indexes moved higher, but the advance wasn't broad. Big cap tech pulled most of the weight.
Yeah, that tracks. And you could feel the split between quality, large cap names and smaller, more cyclical names all day.
Exactly. There were a few layered drivers. M&A chatter and product optimism helped the mega-cap tech and communications names, while macro signals, notably a warning that the next Purchasing Managers Index, or PMI, may be worse, put a lid on cyclical exposure.
Hold on, say that again? The PMI warning basically made traders less confident about manufacturing strength, right?
Yes, the PMI is a forward-looking gauge of manufacturing activity. If it comes in weaker, that tends to hit industrials, materials, and small caps harder than large tech, because those are the parts of the market tied to the economic cycle.
Makes sense. And yields moved higher too, which complicates things for rate-sensitive stocks.
They did. Long-term Treasury yields ticked up, which could reflect a modestly firmer growth expectation or simply a repricing of term premium. Either way, higher yields tend to compress valuation multiples on long-duration growth names. Though, interestingly, the largest tech names still climbed today.
Honestly, I was a bit surprised by this one.
Me too. It shows how momentum and corporate-specific news can sometimes trump macro noise, at least in the short run.
Okay, let's walk through sectors. Tech and communications led, especially hardware and software tied to AI and product cycles. Media was more mixed, especially around ad trends.
Right. Consumer and retail had pockets of strength too, mainly retailers tied to tech-enabled experiences and payment processors that benefit from M&A chatter.
Materials and mining saw selective buying. There were reports of supply boosts and flows into mining assets, so miners and commodity-linked names outperformed in spots.
Utilities reacted to policy around solar mandates and grid storage. Solar installers and storage equipment suppliers attracted interest, while regulated utilities were more mixed, depending on their rate-based visibility.
Real estate had some interest on development activity, but higher long-term yields capped enthusiasm for highly leveraged real estate investment trusts, so mixed overall.
Energy was really a story of contrasts. Oil and gas names held gains in some places, while renewables-related names moved on policy and grid strain headlines. Crypto-related names were also volatile. Miners tracked Bitcoin moves while exchanges reacted to regulatory chatter.
And financials were under pressure. Rising yields and deposit cost dynamics weighed on regional banks, which helped explain the underperformance in small-cap indices.
That was a key part of why the Russell 2000 ETF lagged. Regional banks are heavy in smaller cap benchmarks, so any weakness there has an outsized effect on those indexes.
Quick micro news highlight. FedEx announced a partnership called OnRail to boost same-day shipping capacity, and that was viewed positively for margins in express lanes.
Right. And Poet Technologies staged live demos at OFC 2026, which helped optics around product validation and lifted related optics suppliers. There were also a handful of small-cap filings that created micro-volatility in speculative names.
Cannabis and psychedelics were split again. Policy noise lifted some names and pressured others, depending on whether the headlines were positive or not. Classic bifurcation.
Right. That kind of idiosyncratic news flow is what created winners and losers across materials, utilities, and real estate today.
A couple of technical notes. Today reinforced a leadership concentration theme we've seen across 2024 to 2026. QQQ outperformed, breadth narrowed, and momentum concentrated among a handful of megacaps.
That concentration matters. When a few names carry the market, it increases vulnerability to sharp reversals if sentiment shifts. Analysts note the divergence between large cap and small cap performance can signal a rolling off of risk appetite.
Right, and volume and breadth metrics suggested the advance wasn't broad-based. Upside on limited distribution, meaning fewer names participated in the rally.
So for the outlook, watch these catalysts. The next PMI and manufacturing data. Treasury yields, especially the 10-year yield and any curve moves. Corporate updates and sector policy announcements, and any Fed commentary.
Yeah, if the PMI comes in weaker, that could deepen pressure on cyclicals and small caps. And continued yield moves higher would put pressure on valuations, especially for rate-sensitive and highly leveraged names.
Analysts note a few scenarios. Bull case. If big tech keeps delivering earnings, product updates, and M&A tailwinds, the Nasdaq 100 ETF could extend leadership and pull the S&P 500 higher despite small-cap weakness. Bear case. A materially weaker PMI or sustained rise in long-term yields could trigger broader risk-off, hitting small caps, financials, and rate-sensitive growth. Neutral case. More chop. Concentrated leadership with episodic rotation.
Small reactions, short takes.
Narrow breadth again.
Big cap momentum.
Cyclicals under pressure.
All right, let's wrap with clear takeaways. 1. The S&P 500 ETF closed up about 0.4%, and the Nasdaq 100 ETF led, rising about 0.9%, while the Russell 2000 ETF lagged, down about 0.6%.
2. Internals were narrow. Large cap tech drove the move, and market breadth was limited, meaning fewer names participated in the rally.
3. Watch the Purchasing Managers Index, Treasury yields, Fed commentary, and sector flows for clues on whether leadership will broaden or the narrow rally will persist.
And 4. Sector-specific developments. Like solar mandates, mining supply shifts, and cannabis or psychedelics policy, created idiosyncratic winners and losers today. Analysts note these thematic pockets can produce short-term opportunities, but they also add volatility.
Remember, this is informational only. We're not recommending buying, selling, or holding any securities, and this isn't personalized investment advice.
Data suggests the Fed remains data-dependent and market conditions can change quickly. Do your own due diligence or consult a licensed professional for personalized advice.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next close with another Alpha Recap.